morning. You're watching Businessworld Live. I'm Danie Laurel, sending you over virtually to the Philippine Stock Exchange, where we are, of course, witnessing or at least awaiting the virtual bell ringing of our fourth REIT listing. This is, of course, Robinson's Commercial REIT or RCR. We're going to be trying to get some live feeds for you there. This, of course, follows Ayala Land, Double Dragon, and Phil Invest Land. And of course, we are gobbling that up. That's exactly in 1 minute. Just some news on that. You've actually got the pre-open IPO price at 6 pesos and 55 centavos. That's slightly higher than the 6 pesos and 45 centavos that they were helping, saying that they would be listing. It seems to be ringing right now. It has finally set its debut just at 9:30 this morning. So we will be checking in on that. Meanwhile, let's go straight to our top story. Now, with no end in sight for the current surge in cases, the government is pinning its hopes on a new kind of system to help curb the spread of the virus. Now, from September 16, Metro Manila will be the testing ground for the new alert level systems. The IATF yesterday released the guidelines for this pilot run. First, the DOH will identify the alert level of the pilot areas. Minimum public health standards shall be observed in all cases, but each alert level comes with its own set of restrictions. But first, here's how the health department will classify the areas under the various alert levels. Transmission rates, case counts, as well as bed and ICU utilization rates will be taken into consideration. Areas with the most alarming figures will be placed at alert level 5, while areas with the least critical numbers will be at alert level 1. Areas under alert level 5 shall observe the same guidelines applicable to areas under ECQ. Only essential services will be allowed to operate, while only APORs shall be allowed outside. Under alert level 4, the movement of persons below 18 and above 65 and those with comorbidities shall be restricted the same way as in MECQ. Individual outdoor exercises will be allowed for all ages within the general area of their residences. High-risk activities like tourist attractions and cinemas will not be allowed to operate. Meanwhile, outdoor or alfresco dine-in and personal services will be allowed at 30% capacity. NCR will be placed under alert level 4 starting September 16th. The restrictions become looser as the alert levels go down, with areas under alert level 1 allowing full operations of establishments except those in specific buildings or streets under a strict lockdown. Now, back to that RCR IPO, let's bring in Manny Ocampo of ICCP to chime in. Good morning, Manny, and welcome to Business World Live.
Hi, good morning, Danie.
Okay, Manny, I'm here with my terminal right now, and of course, RCR opening at 6 pesos and 48 centavos. This is slightly higher than the 6 pesos 45 that we were seeing, but again, lower than the 6 pesos and 55 pre-IPO price. Tell us, exciting times for this to be listing at such a volatile period, especially in our economy and even in the classification of quarantine.
Well, that's true. But, the markets continue to be resilient, Danie. And, there's that newfound interest in this particular REIT class. As you mentioned earlier, this is REIT number 4 in less than a year since, or in about a year since Ayala REIT made its debut. No? So, I think we will have one more REIT coming up end of this month, which is MREIT. So that makes a total of 5. We probably will end the year with maybe 1 or 2 more REITs out there that are getting ready. So that we know of at least now. So yeah, this will probably be a year of the REITs for the Philippine capital markets.
Sir, let's try and understand the market support for this, especially since, as you mentioned, there are already other REITs. This is the 4th. There's one more coming on September 30th listing. How do we distinguish between these REITs, and is it not yet overcrowded?
No, I don't think it's overcrowded yet, Danny. No, the market, there's still a lot of liquidity in the market. I think what people are beginning to appreciate is that these become alternatives to fixed income securities. That what are, for example, REITs like RCR. At current price, this is a yield of dividend yield of almost 6%. 5-year treasuries are at about half of that, so 3%. So you have a 300 basis point spread on this one. In the treasuries, you're locked in for the next 5 years. This one is, you know, uh, you have the liquidity available in the market. So as long as price holds, and I would imagine the issuers will try to see and get a lot of interest into the REITs now, so that price holds, and at least they stay at plus minus 5-10%. Hopefully plus 5% or plus 10% of their IPO price, then everybody should be okay.
Sir, how has the appetite for REITs changed since Ayala did their first REIT, especially since now we have a, let's say, maybe not too clear, but a clearer understanding of the work from home model might be taking a little longer. The
Right.
recovery of the economy, especially in the real estate sector, might be within 2 to 3 years still before we get back to those pre-pandemic levels of growth. Has the appetite of investors changed since the Ayala Land REIT until today?
I think, if anything, people have gotten a better appreciation of REITs moving forward. I think people wanted to trade REITs, like
Okay.
regular IPOs, but that mindset has changed to, maybe I'll take a 1-2 year view or investment outlook in this particular REIT. There are maybe two things that you want to take a look at for REITs you invest in. One is the first of all is the your entry price, and what that dividend yield will correspond to.
Mm-hmm.
Their earnings, for example, we hope that there will be no tenants that suddenly pre-terminate their leases. People getting into more leases should be good for the REIT. Um, but the third thing is really what maybe additional assets that get infused into the REITs. A REIT, I think, showed this a very good example of the vending in or infusion of new assets that then gave an impetus to fairly decent price appreciation over time.
Okay, sir, how can we understand whether the price of the REIT is already, overvalued, undervalued? Let's kick off, for example, with Ayala Land, which started at 27. It's now at 38 pesos and 40 centavos.
Right.
You've got Double Dragon going the other way, so listing at 2 pesos 25 and now at 1 peso 80. How can we understand, when to enter as new investors? Because it's quite difficult to understand this compared to, another normal stock, which is much more liquid.
Um, Sorry. So, again, as I mentioned, people will take a look at the dividend yield first, for as far as REITs are concerned. So, is it overvalued? I guess people will say that for example, Robinson's RCR, no. I came in at the IPO at 6.45. I'm looking at more or less a dividend yield of about close to 6%. I'm
Mm-hmm.
happy with that. I'll stay with that. The behavior will be like being invested in a fixed income security. Now, as long as I don't see price drop, which becomes a red flag or a yellow flag for me, and try to find out why is price going down. Have tenants suddenly vacated, and all that. That would be the only time I would be concerned. But otherwise, as the dividends come in, and the track record of most of the REITs would be to pay dividends out on a quarterly basis. So that's a regular. It's regular cash flow already for a lot of investors to take a look at. Bonds, for example, pay what twice a year,
Mhm.
semi-annual. REITs pay a lot more frequently, so that's something people are a lot happier with in terms of cash flow. Capital appreciation, I would expect capital appreciation as the issuer or the sponsor rather, of the
Mhm.
REIT vents in more assets that suddenly justify maybe a higher dividend, and that would adjust in the share price later on, like
Sir,
Ayala REIT, I think.
yes, let's talk specifically about RCR. They have claimed that they are the most diversified of all
Right.
the REITs with the most stable income. Do you agree with this?
But everybody will claim that. Everybody will claim that, Danny. So it's,
Okay.
I guess as far as diversification is concerned, they're in Naga, they're in Cebu, they're in Davao. I guess they are really diversified. But percentages, they may have one in Naga, but it's a small piece of the bigger pie. And
Okay.
and I think, Danny, we have to put that into perspective again. Which properties are the ones earning the big bucks?
Mm.
I don't think the ones in Naga are the ones earning the big bucks. It's good to have diversification, but if the ones located around the CBDs in Metro Manila are still contributing what 90-95% of distributable income, then you know it, it's
Mm.
it really is academic in that case now.
Okay, so it's something that, of course, warrants more research. Sir, what about the usage of the funds here in supporting, of course, the parent company and also having a view to add more properties
Right.
to the REITs? Is this actually the right time to be raising money via an IPO to fund other projects of the parent company when, of course, the industry is quite stagnant, at least for the moment?
Well, the turnaround, Danny, is about what 2-3 years anyway. No, for these things to come to market, for new projects to come to market. I think the outlook seems to be that hopefully by after 2022, after the elections, maybe we solve the two problems of the pandemic and the restrictions easing up, and people going back to work in their office spaces. Second, really, is the shall we say the um, uh, honeymoon period with a new administration after the election. So people will look forward to better times, in 2022, 2023.
Sir, final question on RCR. How do you see the price staying at this, above the IPO price, at least in the short term, specifically, of course, with the new listing that is starting today for
Right.
Emery?
Yeah. Okay. There will always be volatility. We'll probably give it a week for price to stabilize, which is why it's important to take a look at us. No, we will take a look at who holds the stabilization funds. In this
Mm.
case, are they experienced houses as far as doing stabilization intervention, for example, in the exchange is concerned? Will they consume their stabilization funds right
Okay.
away? That's the scary part. If the stab funds get consumed in a week, then you kind
Okay.
of lose support for that. Phil Reed, for example, managed it quite well,
Mm-hmm.
uh, and I don't think they've really fully utilized their stab funds at this time. So
Mm-hmm.
there's still quite a bit of shall we say support available. The bigger you are, the bigger the stab funds required. So Robinson's REIT will be something that we will take a look at closely.
Okay, sir, let's go to the markets and how we're opening above 7,000 finally here, up by 0.6%, 7,010.77. What's driving this optimism, sir? Does it have anything to do with the listing or also with these new granular or levels 1 to 5 classifications with NCR, of course, at level 4?
I think the biggest positive maybe would be the easing of the lockdowns.
Okay.
People being able to move about a lot more. people being able to go back to the office, people being, a lot of the sectors of the economy opening up. That is something always positive that the market will
So
take a look at.
surprising ba po yun? Was that surprising to the markets, this easing?
I think the expectation was we would remain in,
Okay.
in a stricter form, an easy, an ECQ form of lockdown. Level 4 seems to indicate you're somewhere between ECQ and GCQ, maybe closer to GCQ. I get lost with these classifications already, but that's what it seems to indicate, and that's what market seems to be reacting to.
Okay. Last question, sir, on the markets. Is this level sustainable above 7,000 in the short term, at least?
I think it'll stay within a range. This is already frankly, this is already at the top end of the range we're looking at up, for the rest of the year. But we've maybe taken shall we say, a less optimistic outlook at the market. So, if it falls to 7.7, 7.6, it's still, it's still within the range that we see the market trading in. Yeah.
All right. So some downside risks there, but nevertheless within the range as the markets are excited this morning. Thank you so much for those insights, Manny Ocampo, ICCP.
Thank you, Danie.
Checking in on the biggest headlines, 3 business groups are asking the PAGIBIG Fund to waive penalties for companies that were not able to remit employee savings within the past 2 years. The groups wrote a letter addressed to PAGIBIG CEO Ahmad Rizaldi Moti to ask for penalty condonation to help industries recover from the effects of the pandemic. The Philippine Chamber of Commerce and Industry, the Employers Confederation of the Philippines, and the Philippines Exporters Confederation also asked for a longer payment plan to settle outstanding obligations. Now, for its part, PAGIBIG said they will take the requests under serious consideration and will review their policy on penalty condonation. They also assured that ECOP and the community of Filipino employers could rely on the agency for support. Now, the Customs Bureau has so far collected 286 billion pesos in duties and taxes from about 30 billion liters of marked fuel. That's just in 2 years since the fuel marking program was launched in September of 2019. The fuel marking program aims to deter smuggling by injecting products with a special dye to signify tax compliance. The absence of the dye is deemed evidence that the fuel was smuggled. This was implemented after the Finance Department estimated that revenues foregone due to oil smuggling hit 20 to 40 billion pesos a year. And that's a first look into the business day. Today's Tuesday, September 14, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.